Good morning and welcome to Bazaar Morning Call. I'm Anuj, with me Prashant and Sonia. Of course, Ganpati time and the market needs some divine intervention perhaps and might be timely for all you know, and for all of you celebrating Happy Ganesh Chaturthi. After 2 years, we are having this, right?
And Ganpati is the god is known to be a remover of obstacles, right? So hope for them, at least from a market standpoint, all the obstacles are removed.
I mean, I love this time of the year. I mean, the markets are full. It's just complete festive cheer.
Just the traffic is a bit of a
traffic.
problem.
I mean, you got to navigate. It's always a problem, right?
That's okay. That you can take it, right?
By the way, did you guys notice that all of us are in almost the same color? So
tone, huh? Color tone.
purple. It's a purple tie, purple dress.
A bit of a wine tone, yes. But let's put some basic cues on table. The big sort of hope that the market would have is that we have some kind of decoupling. I mean, sometimes I feel I'm going back to 2003 and 4 because that's all that I heard at during those years. That is this decoupling. What is decoupling? The US market has been extremely weak, but our market has been extremely strong. The US market is closing at the lows of the day. For last 3 days in a row, the US market closed at lows. Our market, on the other hand, even on days when we have gap downs or on days we have gap ups, is closing at highs of the day. The only problem perhaps is the dollar index, which is stubbornly close to its highs. Let's see if that retreats a bit. The market also has to react to the weak GDP print and there's weekly expiry as well. The SGX Nifty, all told, is telling you that you'll have a gap down. Futures closing was 17,827. We are starting at 17,461. If the SGX Nifty is right, that is. Let's see how things move, Sonia.
So, as you rightly said, I mean, what's happening across the globe is a totally different picture from what's happening in India, right? So, for now, 350 points down on the SGX Nifty, and that's purely because of what happened in the US markets, not just yesterday, but through the month of August. So the Dow was down about 280 points on Wednesday. It's been 4 straight days of losses in the US markets. And, other asset classes are falling as well on the back of recession fears. So Brent was down about 2% overnight. It's back close to $95 a barrel. And here's the print for the month of August. So just look at it. Dow was down over 4%, S&P 500 4.2% and NASDAQ 4.6%. So the big question that I'm asking is, will the US markets challenge the June lows? But it's a totally different picture for our own markets, right? I mean, there was big buying that you saw from foreign investors day before yesterday, about 4,165 crores. And this 20 DMA of 17,570 is something that the Nifty is holding. So give and take everything, Anuj, do you think that this decoupling theory is actually going to work, where whatever happens in the US markets, our markets stay resilient?
No, obviously, if the US market has to collapse, then our market will also have to take that into account. But Sonia, for starters, I refuse to believe that we will start at what the SGX Nifty is telling us. And I see no reason why we should be doing that. Yes, we've had 2 back-to-back bad days in the US, but our market, the kind of strength that you've seen over the last couple of days, I don't think we open at 17,461. I mean, we might get there after a bit, but I don't think we start there. And that's why I believe that index trading should be available to everyone, on days like today. The US market is weak. Make no mistake about that. But therein lies the answer to your question. The US markets, all indices are trading below their major moving averages. In India, the Nifty on Tuesday closed above the 10, 20, 50 and 200-day moving average. So my sense is, and with this FI buying, by the way, is highest for the year. 4,165 crores is highest for 2022. In the near term, you follow what big money is doing. I mean, if you buy 4,000 crores at 17,700, I mean, if you get 17,400, you would buy. That is my sense. So I think the first impulse should be to buy the dip. Whether that works out or not, the risk-reward trade would be that. There are key zones that you should look at.
And it has worked out till now, right? I mean, when you see a dip, now the automatic reaction is let's go and buy it because it's worked for the last 10 months.
Absolutely. That's something that's worked. You see, if that works, it works out well. And again, this is the zone, right? The Nifty Monday and Tuesday low, 17,166 to 17,401. And Nifty Bank 37,942 to 38,472. What I'm trying to say here is that if you open in this zone or somewhere around this zone, say 17,450, 460, risk reward wise, it doesn't make any sense to sell at 17,400. It would be very risky given the market's recent momentum. The 20-day exponential moving average is also placed at 17,425, which is something that the markets respected on closing basis. And today being the weekly expiry, my sense is that there could be recovery. I mean, if there's a recovery, that recovery has to be led by domestic stocks, bank nifty, autos, something which has been doing well, something which has been outperforming the export-oriented stocks like IT and pharma. So that should be the approach. I mean, if the market breaks the first hour low, then that theory is nullified. But given the recent market momentum and given the price action, my sense is that's how it might play out. Prashant, what do you have for us?
I mean, outperformance is what I have. The market had, right? You know, I am still amazed at what we saw on Tuesday.
Yeah.
I would really like someone to explain to me, I mean, what did we see? Where it came? I mean, it was a bolt out of the blue, right? And 4,000 crores was the FI buying number, and that's the market. I mean, it's all-time high monthly closing highs, absolutely trending, clean day, no doubts, no hesitation, no look back at all. Where does it leave us, though, is this, and the graphics will come up on your screen. Since Jackson Hole, which is where the last time the Fed chair sounded very hawkish, these are the changes. The S&P 500 is down almost 6%. The Nifty is up 1%. These are in local currency terms, but I mean, the exchange rate has not collapsed or moved in any large significant way, so minor variations because of that. 6%, so it's near 7% outperformance in 4 days flat for India as compared to what the US. So the world is going one way, the India is going another. Can that continue? Just a couple of points. Tuesday's move was unusually large and forceful. It was also unusual, I would say. You know, it's always true, and you can go back the last decade and a half, FIIs, foreign investors are essentially, they move markets, right? They bat in the front foot. They are incremental price setters because they buy in an aggressive fashion. I mean, the tone tenor of how they go in, you can see it on the screen. But to see a day like, you know, Tuesday, given what is going on, I mean, it's kind of tough to imagine a global fund, even if there is some allocation which is coming in, or somebody had to allocate before the end of the month here. It could be, you know, n number of reasons, but it was really large. Whatever be the color of the money, etc., it's heartening to see that we actually had large cash FII number. I mean, you know, if it was a very small, piddly little FII number and the market was up, you know, whatever, 3%, that would give you some jitters. So that's a Tuesday session, right? I mean, but that's where we pick off, so that's important. Banks seem to be in a good place, although they have done well. But July credit growth is 15%. Non-food credit growth is 15%. That's strong. It's stronger than even June. Indian market returns are and have been for a while the top of the chart so far in 2022. Number one rank amongst large markets. That also means that India, MSCI India, last trailing 12-month price to earnings multiple is at over 100% premium to other emerging market valuations. So, you know, it's quite something. Again, will there be mean reversion? Usually there is at some point. It needs some kind of a catalyst. One doesn't know, but over 100% premium is where we are at. And there is some sobering news, and we'll have Lata join us in a bit from now. Economists, sell-side economists have cut FY23 GDP growth estimates to about 7% or lower, which still puts India relatively in a pretty good stead. But in absolute sense, there is some come down, some drop-off which has happened after the GDP numbers yesterday. From the global context, what's ahead? You've got the US jobs data tomorrow. That, of course, is important for Fed pricing. And in Eurozone, from 25, from no hike to 25 to 50, now the consensus by and large is at about 75 basis points hike from the ECB come next week. So that's the global setup in terms of where we are as we begin another session. Sonia.
Oh, absolutely. I mean, you know, this market has outperformed global markets quite a bit actually over the last many months. So perhaps today could be no different. But I'm also watching out for the auto stocks because the numbers for the month of August come out today. And, you know, I was just reading the order backlog from automakers is now at a record high. There are 6.5 lakh cars that are waiting to be delivered, and the waiting period is really high. So that just shows you the kind of demand, right? The trends are healthy, especially in passenger vehicles and in commercial vehicles, and the growth rates are looking quite good. I mean, passenger vehicles expected to grow 30%, MHCV is almost 50%. And just two stocks that I want to talk about, Maruti and M&M, because of the auto piece. 85% growth for M&M Autos is what we're expecting to see in this month. So it's going to be a good one this time around.
In the last 3 months, just look at what M&M has done and what Maruti is in the last 6 months. And that reiterates the theory that you buy good stocks in bear markets because you never know when the trend would turn. The market would always move ahead of the data. The data is just showing us what the market did 3 months back or 6 months back, which is make a bottom and then just move on. Both Maruti, M&M, Hero Moto, TVS, and they are up 40 to 50% in last 4 or 5 months from the 52-week lows.
It's phenomenal. You know, the XUV 700 M&M has the longest waiting period in India. Now the waiting period has reached 2 years, Anuj.
Wow.
If you book an XUV 700 now, you'll, in all likelihood, you won't get it for the next 2 years.
Okay. I mean, first of all, I won't book it. If I book it, I'll take your help, maybe, Sonia. Maybe, you know, you'll put
And what if you want a specific color?
In
3 years.
endless. But in any case, I mean, that's the big data point to watch out for today. But let's tell you what is lined up for you. First up, we have some opinion coming in from Victor Schwetz of Macquarie, who says that despite daily hawkishness thus far, there has been not much tightening. He says they are not yet at neutral and investors are backing a moderate recession. Macquarie expects that volumes will rise as we breach neutral, but disorderly derating is not on the cards.
Okay, and on the bonds, we have Dhawal Dalal of Edelweiss, who says that bond yields have declined in anticipation of index inclusion, while global bond yields have diverged. With 10-year bond yield at 7.2%, it's closer to the fair value, assuming terminal repo rate at 6% and heavy government borrowing. To continue, he expects the 10-year to trade in the range of 7.12 to 7.27 in the near term.